Hello friends, welcome to my YouTube channel Bencode TV. This is the lesson 3 of our Forex trading course. Okay, in our first and second lesson we have talked about the introduction. We try to define Forex trading, and in the second lesson we talk about the history of money. For those who did not watch it, I will post the link of these two videos in the description box below. In this tutorial or lesson, we are going to look into section 2, the Forex market quotation. This section contains how to make money on Forex trading, the currency pairs, major pairs and cross pairs, market structure well explained. Okay, let's just move directly to the business of the day. How do you make money on Forex trading? In our introduction video, we use a simple illustration to explain that, but this time around I'm going to look into that the more so that we will explain better, we will understand better on how you make money with Forex trading. Okay, like we said, Forex trading is all about exchanging money and expecting the money to appreciate so that you make some profit. From the illustration we used before, let me say that we have this guy. His name is Peter. Peter is a Canadian, and Peter wants to travel to US. So Peter has 200 Canadian dollar. Let me zoom this so that we'll see it more. Okay, Peter has 200 Canadian dollar, and he wants to travel to US. So he wants to change his 200 Canadian dollar to US so that he can spend some money in US. Now he went to where to change it. They say that if you have 100 Canadian dollars, they are exchanging 100 Canadian dollars for 50 US dollar, for instance. Now Peter decided to change the whole 200 Canadian dollar to US. So now 200 Canadian dollar now gives him 100 US dollar. Okay, it happens that Peter travels to US and he didn't spend any money. His friends spent all the money there for him. After spending everything in US, spending some time in US, Peter now come back to Canada. And now Peter wants to change his money back to Canadian dollar. Remember, Peter has 100 US dollar. He wants to change it back now. He moved to where to change. He now discovered that they are now changing. If you have 40 US dollar, they will give you 100 Canadian dollar. From this now, you notice that Canadian dollar has gained some value, because before 100 Canadian dollar can give you 50 US dollar. Before 100 Canadian dollar can give you 50 US dollar, but now 100 Canadian dollar now gives you 40 US dollar. And remember, Peter now has 100 US dollar. Peter has 100 US dollar. So now he discovered that 40 US dollar can give you 100 Canadian dollar. Okay, exchanging this 100 US dollar to Canadian dollar, how much will Peter get? Okay, from the model we have here, you will believe that 80 US dollar can give us 200 Canadian dollar. Okay, so that is times 2 of this, which will give you 80, times 2 of this will give you 200. Okay, to complete this to 100 US dollar, we say 100 US dollar will give us what? How do we know? 80 give us 200, right? 40 give us 100. So half of 40, which is 20, will give us 50 CAD. Adding it here, we get 250 Canadian dollar. Okay, which means 80 plus 20, which is 100. So 100 US dollar here will give us 250 Canadian dollar. So when Peter changed his 100 US dollar, he's getting 250 Canadian dollar. Remember, initially he has 200 Canadian dollar. Now when Canadian dollar gets value, now he now has 250 Canadian dollar. I hope we are following. If you didn't really get this illustration, please watch this particular section over and over again. So the idea here is that Peter has 200 Canadian dollar before, changes to US dollar. When Canadian dollar appreciated, he now turned this back and makes some profit. Yes, so this is how he make profit. So this is how we make profit in forex trading as well. When you want to trade, you first of all check the currency you want to trade. There's something we call technical analysis and fundamental analysis. You check these two analyses very well. Check the economy of that country to know whether the country is stable, and check the other currency you have. I'm talking about the current cash you have, whether they are going down. The whole idea is all about knowing if this currency is going to gain value. After checking and doing all analysis, if you notice that this currency is going to gain value, you buy the currency. Once the currency gain value, you return to your former currency to make money. Okay, let me use Nigerian currency, which is Naira with US dollar. If you notice that dollar is going to go up, you buy dollar when dollar has not gone up. Once dollar goes up, you now convert your dollar back to Nigerian money to make more money. Assuming dollar is like 480 Naira, and you notice that very soon dollar will become 500 Naira. You just buy the dollar when it is 480 Naira. Once dollar gone up to $500, you now sell your dollar back to Naira to make 500 Naira. Now that is 20 Naira profit. This is what forex trading is all about. This is how you can make money in forex trading. So you don't just go and pair your currency or buy some currency. No, you have to do your analysis very well to know the probability or the chances of that dollar or that money you want to buy gaining value. Once you know that, yes, or you are sure of it, or you have about 80% certain that this will gain value, you just buy it. Once it gains value, you now convert it back to your former currency. This is how you can make money on forex trading. So back to our example here. Let me say that Peter knows that Canadian dollar will gain value. Okay, Peter now use okay, let me say that Peter knows that dollar will gain value. Peter now use his Canadian dollar to buy US dollar. Then when now he noticed that US dollar has gained value, he now sells back. He didn't notice anything, he just buy because he really need the currency. But on his own advantage, he now discovered that the dollar he has now gain more value. So converting it back to Canadian dollar, he makes money. Because initially 100 Canadian dollar will give you 50 US dollar. But this time around, 100 Canadian dollar now gives you 40 US, showing that US dollar has gained value. And Peter has US dollar. So converting his 100 US dollar back to Canadian dollar, he's getting 250 Canadian dollar. That is making a profit of 50 Canadian dollar. Okay, let's proceed. What do we have in our list? The next thing we have in our list is currency pairs. Okay, so we're gonna talk about it now. In currency pairs, we are talking about quoting or pairing one currency against another. Yes, the first currency is known as the base currency, and the second currency is known as the quote currency. Coming back to our trading platform we have here, you see this is USD, known as the base currency, and this is CHF, known as the quote currency. We have here US dollar and Japanese yen, US dollar and Canadian dollar, base currency, quote currency. Okay, back to our tutorial platform. Okay, we give an example here. This first one is the base currency. This second one is the quote currency. Okay, to explain it as very easy as simple, because sometimes people get confused about this. This quote currency is assumed to be the currency you have, whereby this base currency is the currency you want to buy. When you see something like this, USD Canadian dollar is equals to 1.2334, that means that if you want to buy $1 US, you need 1.2334 Canadian dollar to buy this. So this is the currency you have. This is the one you want to buy. So you need this in the currency you have. You need this in Canadian dollar to buy $1 US. So it simply means that you need like more than one of this to buy one of this. So this one now has more value than this. But assuming this thing is written as maybe 0 point, it simply means that you don't even need up to 1 Canadian dollar to buy $1. So in that sense, Canadian dollar has more value than US dollar. But assuming we have something like this, US dollar has more value. So the point I want you to get here is to know the base currency, the currency you want to buy, and the quote currency, the currency you have at hand. So this is the first one, this is the second one. So when you see this pair in a platform, you can see this is what the person trading has, and he wants to buy this, or he's pairing this with this, the base currency, which is GPD, and the quote currency USD. Okay, someone may ask this question: why are we not writing it completely? Maybe why are we not writing this thing US dollar and writing this thing Canadian dollar? How do I know which is which? You know, something of that nature. There's something we call currency code. Yes, currency code. And if you want to know all the currency, all the code for all currency we have in the world, why not Google it? Okay, like here, I just Google this ISO currency code, and it shows me this result. So I now open this in a new tab, which is this. Here give me all the list of the currency code I need to know. So to me, I don't really need to memorize it, but once you are used to it, you will be getting it. Once you see a currency code, you will know the country that has it and how to pronounce it. Like US dollar is known as USD. Anywhere you see EUR is the euro. Okay, these are the countries that are using it. This is the American money, US dollar. Okay, so just like that, we have this DZDs, Algerian dinar. Okay, and a whole lot of them. So you can check to know all the currency codes we have. Let's proceed to our lecture. If there are things that are getting you confused here, please do well to ask your question. Comment on the section below, on the comment section below, and I will make out time to look at them and reply you. So in our list now, we have treated how to make money on forex trading, the currency pairs. We now want to move, believing you have understand what currency pairs is all about, pairing one currency against another. We now move into two types of currency pairs. We have the major currency pairs and we have the cross currency pairs. Okay, in the currency pairs, we say is quoting or pairing one currency against another, and I have explained this and this. Okay, let's move to the major and cross pairs. The major currencies we have is these currencies you are seeing here. This is the US dollar, this is euro, this is Japanese yen, this is GBP. Okay, how do we know this? Just go to your web browser where we see this. I do Control F, I will search it, GDP. You see it here. This is pound, United Kingdom or Britain pounds. Okay, this is Australian dollars. Why am I writing this to? Okay, maybe it's a mistake. We have the Canadian dollar, and we have this Swiss CHF. Let me search for it. CHF. You see it here. You see it. France, Switzerland. We call it Swiss franc. Money used in Switzerland. Okay, this is how you can, anytime you see a currency code, just go to this place, iban.com/currency code. You will see the list of all the currency code. You can do your search to easily get it and know exactly the kind of currency they are talking about. Because in forex trading, like in this platform you are seeing here, we don't write the money, we just write it with the currency code. And I shouldn't advise you to memorize all of them, you understand? Just know where to get it, so that anyone you see here, you will not check it, know the name of the currency and the currency and the country that are using it. Even the platform has what we call a subtitle that shows you about it. Australian dollar versus US dollar. Okay, you can from here see it, but for the learning sake, you still need to find a website like the one I have shown you, that will be showing you the currency code, the name of that currency and the country that are using it. Okay, so these are the major currencies. All other currencies are known as the minor, because these major currencies are the currency that are most being traded in the forex market. This one is the most popular currency traded in the forex market, followed by this. This is being traded 3 times than this, 3 times than euro. US dollar is being traded 3 times than euro. I think this has up to 70 or 80% of all the currency pairs we have in forex trading, followed by all these other currency. Okay, so we are now moving to major pairs now. After listing the major currencies, let's talk about major pairs. What are major pairs? Look, these are the example of major pairs. It's simply any currency pairs with dollar. Yes, in that major currencies we have listed, if any of them are paired with dollar, they are known as major currency pairs. Sorry, this is a major currency, this is a major currency. Everything you are seeing here are major currency, but once they are paired with dollar, which is the number one, it is known as major currency pair. This is the secret on how you can know the major. Once you see it, you first of all check this currency, is it in the list of the major currency we have? If the answer is yes, is it paired with US dollar? If the answer is yes, it is a major currency pair. Okay, now in major currency pair, some of them, due to their popularity, they have gained some nickname. Like these pounds now, when you pair it with US dollar, it is known as the cable. Okay, pairing of USD and Canadian dollar is known as the loonie. Australian dollar with US dollar is known as the Aussie. US dollar and Swiss franc is known as Swizzy. Okay, all these ones might have a guy name or a nickname, but I don't really know about them, whether they have. So these are the ones that happen when you hear the cable currency pair, they are talking about this currency pair. Okay, so on and so forth. Don't forget to watch this video over and over again to be able to master this before we now move into trading the forex. So these are known as the major currency pairs. Now since you have known the major currency pairs, it will be very simple for you to know about the other one. Cross pairs now is any currency pair that does not include US dollar. Like this example, Canadian dollar pairing Japanese yen. There is no US dollar in this currency pair. So because of that, it is known as cross pair. That is just very simple, as easy as ABC. So let's move on to the next. We are now moving to the market structure explain. From our list, we have talked about this. We have talked about this as well. We have talked about this. We are now moving to the market structure explained. Okay, let us talk about the market structure. We say that in forex market, transactions are done over the counter, known as OTC. So because of that, there is no central exchange to trade on. So prices vary. Prices vary in forex trading. What do we mean? Okay, to help you understand this more, let's look into this interbank. Do I call it interbank forex trading or so? So we say that the interbank is a market where large banks exchange currencies with one another. We are talking about extremely large banks. This large bank owns about 70% of all the whole money being traded in the forex. So these guys are trading with trillions of dollars. A very big, large bank. And there are only two platforms they can trade on. The first platform is known as the EBS, Electronic Broking Services. Or they can trade on Thomson Reuters. Okay. These big banks, they own up to 60 to 70% of the forex market, and these two platform is only available to these big banks. Okay, you see that there is no central place to trade this. You can trade either here or the other one. You can trade either through EBS or these are the big banks. Now coming to this the players, these FS dealers are the level of that interbanks, the level of that big banks. These guys are using too much money to trade. Honestly, me and you cannot afford trading at this level. So we have other large banks participants. They are not trading through these banks. These are the level of the local banks, who are into forex. These guys are trading with like billions of dollars, you understand? And they are trading through these guys. Okay, let me assume we have about big banks up to 5, whereby other large banks that are trading with billions are trading through them. This thing is like you want to go to market, you have like $100 to buy something, and I give you like $10 and say, please, since you are moving to US, buy something for me with my money. This is exactly what these guys are doing. So these guys owns about 70%, while the rest in this cycle now owns only 30%. So these guys are giving money for these guys. Not that they are really giving money, but they are trading under these dealers. Okay, whereby the brokers, and the other retail ECNs are trading under these guys. So you see the way the thing goes. These guys are the one trading directly. These are trading through them, whereby the brokers are trading through these guys, and these guys are trading through these guys. Brokers trade through these guys, and these guys trade through the FS dealers. And me and you now are trading through brokers. Okay, so because of this, you will notice that price varies because there is no central platform that we are trading on. I can only trade through a broker. You understand? And now it is now left for the broker to tell me how I will trade through him. You understand? So when we are talking about this market structure here, this OTC, and we say that there is no central exchange to trade on, and because of that prices vary, I believe by now you understand exactly what I'm trying to explain. So this is left from you and your broker. There are brokers that will tell you that they are selling with this price, whereby other broker will tell you look at how much they are selling. This one will tell you look at how much they are buying. The other broker will tell you look at how much they are buying as well. The prices vary depending on the broker you are trading with, but it doesn't vary much. Okay, when you even approximate it, it will still give you the same value. But that you are trading and you notice that this broker is collecting so amount doesn't mean that others are trading with that exact amount. You understand? So when we talk about transactions are being done over the counter and the prices vary because there is no central exchange to trade on, this is exactly what we are talking about. Okay, so that is it for this lesson number 3. We are now moving to lesson number 4. Very soon I will work on the video. Okay, if you love this video, please give me a thumbs up. If there are things you don't understand, I would advise you watch the video again. If you still don't understand it, feel free to comment on this video section and I will look into it. Okay, don't forget to subscribe to my YouTube channel so that you can easily get notified if I release the next video. Subscription is free. Give me a thumbs up and subscribe to my YouTube channel. Thank you so very much. Bye bye.